Commodities take a hit down to multi-year lows with the usual suspects selling off. But our next guest says gold and oil are near their bottoms. Todd Bubba Horwitz joins Kitco News in studio now.
Great to be here, Daniela.
Well, great to have you here, Todd. Now let's pull up the gold chart back above 1100, getting a little bit of relief this Tuesday. So was yesterday's sell-off the final big move for gold?
I look at Tuesday's sell or Monday's sell-off, Sunday night, Monday, is what we call a blow-off to the downside. Sunday night at 8:30 Eastern time, we had a seller come in and sell 27,000 contracts within 10 minutes, dropping the price of gold $50. So that to me calls for a blow-off bottom. We actually rallied all the way back from there to only get down to be about 20-something on Monday before giving it up a little bit late in the day. But I think that's a great sign that the bottom is possibly near, if not in already.
Now let me ask you, the news that came out of China last week in regards to their gold reserves, did it weigh on this?
You ever play the card game BS? I don't believe the numbers. I believe actually that China is probably selling gold on the surface. In the meantime, they're buying it through the back door. That's how they operate. They're very manipulative on what they do. They've done that with gold, with copper. If you remember, They kept copper over $3, so that's...
All right, let's get back to the price of gold now. This little relief that we're seeing right now, how do we know it's not just a dead cat bounce here?
It's very possible it could be, but it has all the appearances. Look, all the bad news is in. The strong dollar, I mean, is it going to get much stronger? It could, but I mean, again, everything we know that could drive the price of gold lower is basically priced into the market. So could it go lower? Sure. But I think this is a great spot as a hard asset that people should own. At these levels, at least a portion of your portfolio should be involved in gold right now.
All right, what about oil? Down for the 5th straight day here. Where's the bottom for oil here?
I think we're probably somewhere around 50. You know, again, you had a lot of manipulation in the oil markets as well. You've got the same issue, the strong dollar. You had Citigroup and Goldman Sachs calling for $20 oil as it was going to 65. So now maybe they're getting a wish. I don't think so. I think we're coming down here to a pretty key level. Iran has nothing to do with this whole situation. Their oil is minuscule, besides the fact that they won't get it back online. And by that time, the United States will be self-sufficient anyways. There's going to be a need for oil. If you believe that the economy will ever improve again, we will have a big need for oil.
All right, so commodities getting crushed here down to their lowest level since 2002. The big question is, does this give the Fed further reason to not raise rates?
They are looking for every reason not to raise rates because they're not going to raise them. Janet Yellen has no courage. She's got no guts. She's not going to raise rates. If you listened last week to their Humphrey Hawkins testimony, she already said maybe December. We know that December is off the table because they're not going to put a down market into Christmas. They're not going to raise rates at least through till next year, first quarter, maybe. And I doubt that. This economy does not support a rate increase. They missed their opportunity, Bernanke, in May of 13 when he choked and let the traders take over because the Fed is too busy day trading the market.
Okay, so only late 2016 maybe?
2016, maybe 2017.
All right, Todd Bubba Horwitz, thank you so much for joining us in studio.
Thank you, it's great to be here.
And thank you for watching Tuesday's Gold Report. We'll see you tomorrow.